Happy Sunday, guys. I hope you all have a great weekend, or at least having a great weekend. First and foremost, I wanted to mention Traders for a Cause because last time I put it maybe 10 minutes in, and I just want to make sure you guys saw it, heard it, and hopefully signed up. It is a free event. So all you got to do is under the description in the video, we have a link. You just sign up. And it's going to be a GoToWebinar / we're also going to probably broadcast it to YouTube just because we just don't have enough seats. We did this for COVID and maybe like 4 or 5 months ago, and we raised about $180,000, almost $190,000. So we are hoping to break that. It's more of a pay it forward kind of movement. We're hoping to get sponsors. If you're interested in sponsoring the event, reach out. You know, Zach's information is on that page. If any of you guys are interested in potentially doing some type of trading, not necessarily a trading challenge, but a percentage of gains, a day's gains, whatever it may be, just like myself, St. Lucie, as well as many others, Russell, and a few others. I forget how many, but we had about a handful, almost a dozen people that decided they were going to do a percentage of their gains, which was awesome to see. Which is the goal of events like this. You know, if you trade well, you profit well, you know, kick some over. Kick some over, and it's going to the Breast Cancer Research Foundation, which has been amazing to us. Myra is an amazing lady. She's very inspiring, and she's very engaging with everyone. So we always like to support them. There's also a lot of close ties to cancer within the Traders for a Cause community. But we're also going to have a few other beneficiaries. So the sooner that you get on the list, the sooner you can offer your own input, because we're going to be listening to you guys. We're going to be sending out a couple surveys and just seeing what's important to you guys to be able to support as well during this event. Typically, we do this in Vegas. We do what's called we call it Trader Talks, and Trader Talks are basically kind of like our version of TED Talks. TED Talks are supposed to be like hard-hitting, you know, whether it's 3 minutes, 5 minutes, 8 minutes, and I think it's got to be under 8 minutes for a TED Talk. Maybe it's a little bit longer, but we do about 10 to 15 minutes. And the point is, condense that hour-long presentation, get all the meat out within 15 minutes, and leave people wanting more. Maybe you inspire somebody, they reach out to you, that you know you end up inspiring that person beyond just that meeting, just that event that we're doing. And maybe it causes other people to become better traders and be more giving in the future. And that's our goal here. Our goal is to pay it forward so that hopefully it comes full circle and, you know, giving becomes a bigger part of many traders' lives. Because at the end of the day, you know, that small little bit goes a long way. And, you know, for me, it took me a while to just give more than the normal amount that everybody does. And you start to realize it doesn't matter. It doesn't matter. It's just one day. Kick it all over. And if I can inspire a couple people to think about that in October, you know, that day that, you know, you've been firing this year, it's your best year ever, you know, but have you given the most to charity that you have in your life this year? Maybe, maybe not. So if you haven't, consider it. And basically all proceeds from this event are going right to the cause. So that's that. That's in the description, and I just wanted to get that out of the way. Make sure you guys check it out. Avidity Fitness, you guys always know I have a link in here. I really would like to see some of you guys come out there and just do. It's Tuesday, Thursday, Saturday, Sunday. And it's 6 p.m. Tuesday, Thursday. It's 9 a.m. Saturday, Sunday. 20 minutes, 30 minutes. Get your cardio, your HIIT trading in, and get out. It's really helpful for me. This weekend's topics, video topics. One thing that I was thinking about is, you know, I'm always progressing as a trader and scaling and using more size and kind of dabbling with some of the overnight shorts and things like that. And one thing that I thought about this week was, and I see a lot of people always kind of pushing the envelope, trying to get where they think they want to be. But one of the best things about having St. Lucie in the office, we were always talking about it, like, you know, once you get to a certain point, you know, some people want to keep on going, and then that just never ends, right? You're never going to be happy. You just got to keep on chasing. But for others, there is a way to continually compound gains but not compound the stress that comes with it. And that should be, in my opinion, most people's goal. I found a lot more stress having to kind of wake up early. All right, what's this at? What's that at? And don't get me wrong, there were some really good trades. The INO overnight position that I had on the short side from 1850s, 18s, and then it gapped down, it flushed out to 14s the next day. WKHS shorted into the close, I think it was Wednesday night, gapped down like a buck, flush at the open. But, you know, you get in a situation when you have a lot of size, and you wake up and you're like, whoa, you know, I'm up a ton, this is great. And then all of a sudden, you know, you only cover a portion and whoop, you know, it swipes back up the other way. Because we're in a bull market, and as soon as the selling stops, guess what? We're going higher. And, you know, that added more stress. Not necessarily like bad stress, but just more things to worry about, more things to wake up to and think about. And I wasn't able to have a clear head in the morning, wasn't able to go necessarily for all my walks because, yeah, the trades were working, yeah, they were nice, but, you know, was it worth, you know, is the opportunity cost worth it? So, you know, that's something that I'm always exploring, trying to figure out what size is good, what size isn't good. But how do you keep on progressing more and more and more and keep on getting better and better and better at that strategy? In the end, your P&L should be better, right? If you're continually making it better. But how do you keep that stress down? How do you keep the stress level down without, you know, raising your P&L and your stress at the same time? Because if you're always stressed out, is it really worth it, right? And again, if you get to a certain point, you know, and is it worth that extra 50%, or is it worth that extra 10% more? You know, whatever it may be, and you need to find, you know, figure that out and ask yourself those questions. But for me, it's about always finding a better way and always decreasing the stress that comes along with it, because that doesn't just end at 4 p.m. You know, when you are too stressed and when you're pushing the envelope too much. And maybe kind of pushing things beyond what a typical edge would be. And so I think that that should always be in the front of your mind, just to, you should always feel comfortable with the trades that you're in. You know, if you're in there sweating it out all day and you're not moving and you're just, you know, you're just waiting at your computer for things to happen or hopefully come back the other way, it's just not worth it. It's not worth that extra money. So that's my opinion. I would challenge you guys to make sure that the steps that you are taking are also decreasing stress. And that was a conversation that Sanlucci and I had in the office when he was in New Hampshire, and you know, because he was at the point where, you know, he made a bunch of money, and it's just like, is it really worth it? You know, what do I want out of life? And you know, for him, yeah, he wants to become a better and better and better trader, but is it worth dealing with all this other stuff? Or is there a way to juggle it so that the stress level stays constant and you just find a better way to increase that P&L? So that's my thought with that. I just figured it was a good time to talk about it, just because, you know, we're entering that market where there is opportunity every single day. But I feel like that, you know, the prior 6 months there was just, you know, unlimited plays. There still is. There's still a lot of plays, and especially the long side guys. But I feel like some people are starting to overcompensate size, trying to force trades because it's not as there's not as many layups as there were before. So I kind of feel that with that comes more stress. With that comes more forced trades, and that also kind of rolls into what I saw this week. Especially in the room, some folks, SAVA, for example, so, and VXRT. I trade the front side of the move a lot, but I don't use size. So the only times that I use size is parabolic moves. After it parabolics, pulls back a little bit, stuffs, and it puts in that top. I'm interested in scaling into that. Otherwise, if failed follow through momentum, broken chart, scale, rebound, scale, and the trend is your friend and you just let it, you know, unwind. Stuff that I'm prepared for. However, if we're talking about INO, SAVA, VXRT, and all these different runners this week, WKHS, if you are trading the front side of the move, we did a video about this a little while ago about pre-exhaustion. You don't want to pre-exhaust yourself. Otherwise, you're going to be stressed, like we just talked about. But two, you're going to miss the entire move. You're going to exhaust yourself out of the trade. I wait for traders to exhaust themselves out of the trade, and then I look to pick up the pieces. In order to get there, in order to get a feel for it, I have to be in there small, right? I like to dabble in. If my end game is 50 or 100,000 shares, I might start in 1,000, 2,000, 5,000, or 10,000 shares. You know, maybe scaling along the way just to kind of get a feel, making sure that I'm in that trade, making sure that I'm zoned in, because as I've said multiple times, you know, I need to be in the trade. It's got to be on my screen. I've got to kind of get a feel for what's going on. And if I'm not in the trade, then I'm just kind of a bystander and I'm not really zoned in. But even if I have a small amount of shares, I zone in, I focus, and my brain just kind of watches it. You know, whether or not it's my main trade, it's still, I'm in it and I'm watching it. And that's what I need as a trader. So with that said, as I say in the room, you know, if you're a new trader, avoid the front side. And I give those key levels, just like SAVA on Friday, I gave the key levels. If you're new, do not try to short anything above this line. Otherwise, you're probably going to get ran over. And I saw a lot of people trying to short into VWAP or into the weakness, and I just kept on reminding, being a broken record, because I've been there. You know, I've lost plenty of times stepping in front of moves. But I can tell you that there is plenty. The higher these things go, the more downside there's going to be that day that they pull back. So don't step in front. The other thing about this market is, and the last note that I have as far as, you know, starting this scan off, was supply and demand, right? So the markets are all about supply and demand. There is so much demand right now that some of these pullbacks are just kind of to tease shorts, to okay, yep, we're pulling back, yep, it's time to short, it's coming in, and then they don't break down, and then they kind of go again, and then they don't break down, they go again, they don't break down. They're just setting up for that next move. You can look back at DraftKings, SHLL, even DPHC right now. It's been a little bit of a difficult trade. SPAQ was kind of ramping up, felt super biased to the long side, which it probably is. But in this market, it doesn't matter because people aren't selling. They've seen the other things double, triple. So all they're doing is they just pull it back, consolidate for a few days, give shorts that conviction that it's breaking down. And then you saw how it closed on Friday, SPAQ, ripped right into the close. So this is the current market environment. There is more demand than supply. You saw that with Tesla. They dropped $5 billion into the market. And they don't care. Probably hit new highs this week, right? So the only supply that you can see, you know, for example, AMD, Apple, things like that are failing to follow through. If you are on the other side of the chart and it's grinding up like this, don't underestimate it. You know, everything is in a bull market. Everything is ripping. Everything can go further than you think. And CRDF is another example. You can go back and check that out. CRDF, squeeze. I wait for the exchange of shares. And, you know, everybody always asks me, how do you read the tape? You know, do you have any video to explain how to read tape? And my answer is always screen time. It's never going to be the same. There's never an objective answer, a yes or no, or it's time. It's always subjective. So you need to have a plan when what you see, you know, turns into a trade for you, where you're going to be wrong. Where at which point is what you saw basically, you know, expired, you know, no longer doing what you thought. And an example of CRDF could have gone 10, 11, 12, skipped into a circuit halt. You have to be prepared for that. However, there was a huge exchange of shares, 1050s, 1040s, and I said I was going to short the next stuff. That would be the only point that I would start into size. And so we had a stuff move, and it slammed down to 980s, 970s, 950s. Had that based and started to form trend at 1050s, I'm on the front side of the move. I have to either size down or get out. And last but not least, WKHS was a good example. Sava, all these things. If you're trading the front side of the move, make sure you take front side covers. That's the most important thing when you're trading the front side of the move, because otherwise, and this is, where I had trouble last week was I nailed a lot of great entries and perfect timing, but I took half off. And then it slowly grinds back and kind of minimizes what you are either up, or it takes it all back. So that's where I need to focus this week, as far as if I am starting to scale into trades, trading bigger size, I need to take the trade. Forget the whole I'm going to trade around a core type situation. Unless it's actually broke under key levels, and we can go over some of them, but INO is a perfect look left situation, WKHS was a perfect look left situation, VXRT, all these different names are all much easier if you take the time and look left as to where key levels are that matter, where the tide would change, and where the tide would turn. And you'll realize that a lot of the trades that you're taking, you're actually above that key level. And each time it comes in, you get more and more conviction. Meanwhile, they're just shaking out longs, trapping shorts before the next level. But if you wait here, you'll notice that a lot of those continue to fade off. So that's about it. Hopefully you guys like my shirt. This was a great trade last week, so I decided to buy a shirt to celebrate it. But this is a great example of kind of understanding the situation. A lot of people just don't understand what's wrong. Their defense is the truck works now. But the reality is that if and when it did not, when they suggested to investors that it did, that is a problem. Doesn't matter what it does now. It matters how they portrayed it at the time. It matters how they disclosed it at the time. So all of that will play into, what happens. Yeah, maybe it can survive this, for sure. Lots of companies always have SEC investigations and things like that. DOJ is now involved, which is never good. They have a lot more ability to review, but I think that it's very important that you just understand the situation. It's not whether or not the truck can actually roll with its own power now. It's really about what was known at the time to the investors that forked up hundreds of millions of dollars. And if their understanding, regardless if they made money, but if their understanding was anything except that, oh, this thing did roll down a hill, the video that we saw that we decided we were going to put money in, then there's a problem. So anyway, let's get right into scan for tonight, and we will we'll go over all the main watches. We'll go over what I'm looking for, and hopefully we start out Monday well. All right, guys, so first and foremost, for Monday, now these are my main watches. Typically, I take 2 of them, add 2 more based on whatever's happening Monday morning, and then focus and zone in on those. The goal is to be familiar with all the names on scan so that if and when the trade comes, I'm ready for it. And PENN, P-E-N-N, is a perfect example for that. It wasn't necessarily a main watch on any given day, but I had been watching it, and as the trade and the catalyst came to a close, I reacted and took the trade. So it's always good to follow the trend, follow when things break out of trend, and that's when you start to get a nice edge. So anyway, this is a perfect example, WKHS, looking left, like we talk about all the time. And one thing that I would recommend is just to make sure that you guys are doing that. Look left, especially if you're trading the front side. It's very difficult right now to kind of fight the trend on these things. There's a lot of great breakouts, but if you guys looked, 2780s was a key level. Looking left, you can see it based all day, and then the 28s was that next key level, and then even late day, you could see how it held prior support levels before it ended up taking off into the close. So as I told traders in the room, as I told even myself, if you're trading that front side, there's great trades there. Don't get me wrong, because yes, it's easy to stay long, and that's all in hindsight. You never really know how high these things are going to go, but there's so much liquidity that you can actually take a solid trade, solid size, and anticipate that flush, but you have to be there for it. But where do you need to be? So if you look left and you look at where it was consolidating last time, you can see that it starts to base at that 2890s level, and that is the exact same level that we talked about in the room. And I said, guys, if you took the short trade on that failed follow through momentum, make sure you're covering under 29s. And that's exactly where you need it to be. And like I said, SAVA, WKHS, a perfect example of, you can have the best entries and the best covers, but if you're trading around a core, you end up minimizing the trade. So anyway, higher the better. This thing is obviously in breakout mode. I don't know if it was just a big squeeze out on Friday or if we're actually going much higher. These things can turn on a dime, right? So, they blow them off, there's a bunch of volume, and then you see them, pull back. I do think, though, that if this continues to trade really, really well and it starts to hit a wall, I think we can have a $2 pullback and a $2 pullback. And I want to be there for it. I don't want to pre-exhaust. So I don't want to be trying to find the top, and then just say, you know what, screw it. I keep on trying to find the top, I'm done with it. And then guess what? I blink, the next day it's down $2. It's down $2 again. So let this thing blow off. I think we're going to have a great opportunity. I'm looking to trade it. But for now, if weak opens, pull back. Also, another way to look left. If weak opens, pull back, and it starts to hold trend. So, this after hours kind of throws things off. But in a normal move, something without that after hours action, I'd be looking left, and I'd be looking, so say it closed at 30. I'd be looking 2880s down to maybe this prior level of support, which actually lines up to VWAP. So as long as 2950, 2970, 2980s starts to, it flushes out, consolidates, and starts to base, that is an attractive potential red to green move. Normally. But like I said, it squeezed out into the close, so I want to go in. Ideally, higher the better. Reactive trade off the open, flushes out. If it stays heavy, I would scale. If not, supply and demand. We're in a bull market. Things are going crazy. Don't step in front of stuff. I know it's fantastic. Started off the week with a long idea. That was, if you guys paid attention to the scan, last Sunday, the idea was potentially the next kind of CODX and APT type move. So that next morning, when it pulled back and it held trend, I got long. So I only made it to about 16.20, I think. It closed, I think, 17.50, 18 that day. Traded it here and there, but I ended up getting short, flushed out the next morning, and then we had a nice squeeze. We had a great alert in the room by T530 right here on a thing about the test that had been passed around, and I mean, that was it. That set the tone for the day. Once again, same thing I talked about in the room. 1710s kind of being a key level, especially if you're trading the front side. You want to be there because yes, it ended up coming back down. You can see, and I'll draw some lines here, but and so 1710s right here, and yes, you had some resistance over here, but if it didn't top here and it continued to go higher, you would have been happy with those 1710s. So it's always good to find out where it's basing, where it's basing, where it's basing. Assume that it's going to hold that level. And that means covering at least half, if not more, and knowing that you can always put it back on. I'd rather re-add a little bit lower, knowing that it's under that level, it's holding that level. Just because it cracks under that level does not mean it's game time. What means game time to me is it breaks under the level, retest fails, and unwinds. So, higher the better. 1710 is going to be a key level for me in a situation like this. It did pull back a little bit after hours as well, or consolidated anyway. Pull back under 17s. But the two key levels is 1720 and probably about 1750s or so. So I would love to see a gap up, retest 1720, 1750s, hit a wall, and unwind. So once again, I am very open to either way, long or short on this trade. Ideally, 1720, 1750s pushes out for a reshort. But if this consolidates for a couple days, you know, then it could be like a VXRT, SRNE, where everybody's on the short side again, too much demand, and we have that next kind of push. So be aware of that. I am unbiased on these names. I am trading them both ways, and I'm just trading the opportunity that comes. Kodak, this was fantastic. Anybody that saw on Twitter, the idea was basically if 880 starts to firm up and confirm, and you can see that it did, you know, throughout the day. Once again, you can see that it had this support right over here, right again at 10 a.m., and then again confirmed after noon. So once that level, and again, it had pulled back on some negative headlines. CNBC ran about Democrats, kind of suggesting that the internal investigation was, you know, was filled with errors or whatever. I don't remember what it was. But the fact that it took that negative headline, came back, rebased at those key levels, the 880s that I had tweeted out, is, for me, that was like, okay, it's game time. It's proving that there is not enough supply to keep it down. There's more demand. There's probably a lot of shorts, and that's why I got long, and that's why I took it overnight for the gapper into Friday. Sold most of it after hours, traded a little bit on the short side, traded the open short side. But as I wrote and as I told in the room, you know, I was there 1108s, 1110s, 1111s, and I mean, it was hard. It was hard to get fills. Trading 100 million shares that Kodak did, it was hard to get filled on any size on the bid side. So to me, you know, you could have swiped for sure. But any time that I'm on the bids into key levels and I'm barely getting filled, that sets off an alarm in my head. Okay, you know, don't fight this thing. You got to go ahead and cover. You got to size down. You got to get out. So anyway, that's what I did. I tried it a little bit towards the end of the day, got short, nice pullback after hours. My thought is they squeezed everybody out. We did a full discussion in the Traders Lounge at 12. We were talking about it at 12:45, the hidden seller. And sometimes they pull that hidden seller off, squeeze everybody through the 1250s, and then put the 1245 offer back. And that's kind of what we saw. So understanding the time frame, 3 p.m., 3:15, into 3:30 p.m. So you got a lot of weekend covers, people going from 4-to-1 to 2-to-1 to 1-to-1 type margin. You get a lot of forced exits. Sometimes brokers size their clients down if they're overextended. So with that said, taking all that into account, if we get a push in the morning, if it opens 1220s, I want that push retest the 1250s. I want to assume that they're going to shove it into that and stuff it, and then potentially unwind. And that would be the trade that I'm prepared for. Otherwise, 1180s, fail, 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 I would join that. That's the second trade that I would take. And then the last trade that I potentially would take on the reverse side, the long side, is if we pull back and, you know, looking left, we start to base at this consolidation level. And that could be 1150s, that could be 1130s, you know, pretty much where it held all day. Again, everybody in their mind is thinking this thing went to 60. You know, they forget that they dumped a bunch of paper, they forget all that kind of stuff. And then the shorts also forget, you know, they're like, there's no way that could happen again. And it probably doesn't, but that doesn't mean that it can't go 15, 17, 20 or something silly. So there's always that chance that we have that secondary move. So if they base it 1130s, 1150s the next 2 days, then, you know, into Tuesday, maybe Wednesday, if that flush holds, I might get interested on the long side for that next leg, 12 to 15. So right now, I'm assuming that they squeezed most people out, and it was just a large share scalp. But if it bases and if it starts to trend, I want to be aware that that is a possibility for secondary squeeze. I have Apple and AMD, big names. I have them on main watches just because AMD's been fantastic. Apple I have up there. I want to have it up there just to kind of have a feel for what's going on in the overall, tech and it's been kind of leading. I feel like a lot of people watch Tesla and Apple to make decisions. So I haven't been trading Apple as much lately, but just to kind of recap with the trade idea, the trade thesis of every Sunday scan that we've been talking about the last couple weeks, I am still of the mindset that we go back and pretty much come back into the end of July levels, which is healthy. Apple, same thing. We're almost there, and it's very possible that we go under 100 and then we start to panic everybody out. That is good. Just like you saw Tesla. The sooner you get that panic, the sooner you can rebound. If it's just a slow and steady pressure, that can last a long time. And that's why you're seeing Apple slowly but surely unwind. Meanwhile, Tesla has already rebounded because they got everybody out. Flushed out, panic. Oh no, where's the bottom? Oh my gosh, it went down again, flushed everybody out, and then boop, back up almost to the highs. So the faster that they can flush people out, the faster they can have that panic, it creates a new base, a new bottom, and then everybody, it gets up on the wrong side. So same thing with Apple. We could turn on a dime any day. But you just got to kind of think about where we are in the market. We just filled this gap, which was right around to the 105 level, that area. We've got one more gap to go potentially. So again, it's not bearish. It doesn't mean the market's going to tank. But it's healthy for these things to pull back. They haven't for so long. So AMD has been a great trade for me. A very sizable trade. You can size in, size out, unlimited liquidity. The key is just not to fight it. But I could see this thing going 68, 70s if the same kind of pressure remains. Again, if we take a leg up and anything happens, it's market permitting. So, that's my thought now. But, all of a sudden we're up 500-700 points tomorrow, then, who knows. CCL, a little bit of frustrating given the read that I've had. We've been talking about how heavy I felt like this thing was. Obviously, they knew. They've been selling it hard to do that offering. But it's staying heavy. I'm going to be watching the NCLH and CCL for potential just, kind of fade it on the as I'm trading other things, potentially fade any big days, any big gap ups, anything like that. BYND, beautiful trade on Friday, had a downgrade and it remained relatively weak. Nice fail. You don't need to trade any of this action, this big move up towards 153. I did. It was a great entry and it allowed me to be able to size in a little bit faster. But for a newer trader, you can wait for it to retest towards the blue line, which is that VWAP level, and then we had that nice flush. Once again, as things speed up to the downside, you want to be there. In this market, you want to be there. You don't want to be expecting, just disaster on everything, because you'll still be waiting and it's going to rebound without you. So that's the difficult part about this market is, normally in any other market, yeah, maybe you'd get another buck or two or three, but not in this market. So you've got to be there. When things open up, the floodgates open up, be there for it. Pen was beautiful. I posted a review of that. Nice failed fall through momentum. Nice top here formed at 75.50s looking left. So if you just drew the line across that, you always assume it might want to rip past that out of the gate. Reactive trade for me. For newer traders, you can wait. This prior base, prior level of support becomes the top right here, and a good solid risk to reward type of trade. Rdfn, I'm watching for potential continued unwind for a situation like this. I like to look for it to come back up towards this prior level of resistance, kind of at least kiss it and see if it fails. So that's one line, so 46.50s range, and then maybe up towards the 47s. Higher the better, and then looking for a potential unwind. I feel like this chart is starting to roll over a little bit. Again, that doesn't mean that it has to. It's just my opinion. And as you guys know, it could just be something like PTON where, it flushes out a few people. Again, just like we saw. It flushed out on the earnings day. It flushed out again. It got it over with, and it's back. Back carrying on towards higher. Next ones are under the continuation setup. This one had a bunch of calls on Friday. total turd name, but totally cult type name. So very possible everybody's working hard this weekend. Hopefully they put out a PR or something. Maybe it gaps up $1.50, runs to $1.70. I don't know. Maybe it does nothing. But nice rebound. It's been fading for quite some time, and as usual, this is one of those situations where you post your people post facts on Twitter, but everybody knows best who's long, and here we are back to $1. So don't be the guy that marries the story and becomes part of the cult. Just trade it. But I think there might be an opportunity, especially if 120, 130 starts to build, and we'll obviously see if that pans out or not. SAVA, my thought is that we could still be squeezing out, but we're at some very key levels, right? So I think that we could squeeze out and retest these levels, but I think we're going to run into some issues here with inventory, just too much size, too many people making too much, blowing out that ATM probably for 100 million and so on and so forth. So I want to be aware of these key levels. And just like I went over in the room, you want to assume that it's going to blow through these levels, but eventually it'll sit back under them. So 970s was a key level. Obviously, we're over the 10, and then the next key level is going to be around 11 or so. So higher the better. I would let it exhaust out all the traders and then come from the backside, failed follow through momentum, look for the pops to fail. If we consolidate for another couple days, you just saw what happens when it consolidates for a couple days. Wick gets bought up, wick gets bought up, and then goes. So if we do that for another couple days, we could have that next leg 11 to 12. So keep that in mind. Squeeze out everybody from Friday, but definitely a potential trade there. Three stocks that I love the charts on that I'm going to be watching for potential breakouts. One is CLSK. Nice rebound. They bought all the dips. And again, they got that flush over with and consolidated. CBay is set up fantastic. This one I've been talking about for a little while. Don't have a position yet. I did for a little while, but I'm going to be looking to get in there versus maybe the 670s, 680s. Probably too tight of a stop. Probably would use 650s as the guide, but what I'd want to see is 670s, 680s kind of firm up, but leave wiggle room 650. And then CLDX, another great chart that's been setting up for quite some time. Again, the flushes gets bought back up, bought back up, and then it's kind of stepping towards this 13, and then this 1350, 14 type breakout. So we might have a nice setup here towards 15 near term. So it's worth watching. SONN, the last one, total junk name, but again, it's all about supply and demand. Had a nice little rebound here on Friday. Worth a watch, because if they blow out all this paper and it's all, absorbed because of supply and demand, then we have a potential trade. So that's it for what I'm prepared for. Like I always say, I have a whole nother section. So if you click through to the website, under the description, the section that I put the price alerts, or the section that I call staying familiar, I put price alerts for everything. So when certain things hit, I'm ready for it. So, Penn, I had price alerts 70, 71, 72, 73, 75, 76, 80, and same thing on the way down. And because I saw those hitting, immediately goes on my radar because now it's hitting the points that I was interested in. So, you have different types of charts. IX, for example, just to give you an example of this was a nice breakout idea from last week as well. But, in a situation like this, you might want to be alerted if it comes back towards 680s, and you might avoid it otherwise. But I would typically put some 680, 650s alerts just in case you wanted to get involved on the long side. Situation like TCON has been steady up, right? So, at what point does this fail? And you might want to just keep it on radar. So setting a price alert at 7, 8, 9, just in case it starts to go crazy, then you won't miss it off of radar. And same thing, SHLL. These are all just different names. I'm watching ACB, for example. ACB, I'm going to be watching for a potential rebound. It's totally sold off, totally, you know, getting smoked. But all it takes is a PR and 100 million shares traded, and guess what? We've got a 30, 40, 50% gainer. Not that I think it's going to do that, but it's a known runner in the past, and I want to stay familiar. Once this starts to change trend, if it ever does, and it doesn't just keep going to zero, then we have a potential gainer. And same thing with CODX, APT, INO, VXRT. You saw those all on scan last week. They looked kind of like that. And because of that, I put them on watch. I set the price alerts. I knew I wanted to watch them for potential. And as soon as they change that trend, guess what? 30, 40, 50, 80% moves. So we're in that kind of market. That's it, guys. Real quick, Alex Delano and PD Trades got the shirts for this week. They're not these. This was a special edition purchase directly from them. But we've got some new shirts. And I think that's about it. So please leave a like. Enjoy when you guys like the video. That helps me. I love doing these kind of things. I would love for you guys to put key takeaway in the description. You know, it helps me learn what you guys are learning best, as I always say. And then that way I can kind of focus on those points on the next video, zone in on what, you know, people found as the best kind of content, what their biggest takeaway was. And then that's it. So we'll see you guys in the room tomorrow. If you have any questions at all about Investors Underground, coming on board, et cetera, then reach out to Cam at investorsunderground.com. And that's it.